You gotta help Norman. I can't hold you and hold my paper. I need a paper because I can't remember all this stuff. No, I can't. I can't remember all this stuff. Yeah, can you sit down? Can you lay down? There's a whole couch right over there if you want to lay down. What's going on, everybody? This is Adam. I hope you guys are doing well. As you can see, Norman is joining me today. We're going to be talking about mortgages. Are you that excited about mortgages? It's pretty exciting stuff. You don't look that excited. It's okay. I want to talk about today a little bit types of mortgages and kind of just a better understanding so you know what's out there, because everybody knows the 30-year conventional mortgage. That's what hits the big headlines. That's what everybody's like, oh my goodness, the rates are at 6, 7, 8% now, or whatever they fluctuate. Obviously, at the video, it's going to be different than when I'm posting it to compared to when you watch it. So, but anyways, so there's lots more options other than just a 30-year mortgage, as many people surprisingly don't know. And frankly, when me and my wife first got our house, we didn't really know much about mortgage either. But hopefully, this will help. I'm going to start with adjustable rate mortgages, and they're pretty self-explanatory. They're adjustable rate mortgages. So for the first, there's 5/1, 7/1. There's different version lengths, things like that banks offer depending on the lender. They'll give you different options. And so for a 5/1 arm, you'll have the first 5 years you'll lock in a rate, and it just depends on what they offer you to. So for example, if rates right now are 5%, you could get an ARM for 4% or 3.5%. So you could pay for having those rates lower for the first 5 years, and then after that, it'll then adjust to whatever the rate may be at the time 5 years down the road. If you're not planning on being in your home for that long, this might be a good option for you. If you're planning on maybe refinancing at that time and getting a more conventional mortgage or something like that, you want to keep the flexibility there for you, and you know you can get a really good rate right now with an ARM, that might be a good option for you too. So it's a little bit more flexible, a little more risky down the road if you're thinking long term, 5, 10, 15 years, or even 30. But if you're more in the short term mindset, that might be the right loan for you. And again, I'm a realtor, not a mortgage broker, so I'm just trying to give you the kind of aerial view of what each mortgage option is out there for you. Next up, in lengthwise, there's a 15-year mortgage, which are fantastic because they can save you so much money in interest over the life of the loan. That means you'll have more money in your bank account, your pocket, when the mortgage is over. You'll also have all that equity from the home after 15 years too. The biggest downside is it's more expensive, frankly, a month, and the rate, it might not be, it depends too. It might be a little bit higher than a 30-year because they want to lock you in for that longer rate, interest rate. But when you do the math, you save tens of thousands, if not hundreds of thousands of dollars, depending on the size of the mortgage too. So if you got a few extra bucks you can spare a month on the home you're looking to purchase, it's a really good way to save money. And if you're looking to stay there a little bit longer too, it's, again, a smart decision if you can afford it. Then we go to 30-year, which most everybody knows about as conventional. Whatever the mortgage rate is, you can get a fixed rate or an adjustable rate mortgage. It just depends if you think, again, if you want to play that little bit of a risk game and you think the mortgage rates will go down in the next year, 6 years, whatever, then you can you can not pay, but you can then refinance depending on your mortgage, maybe save a few bucks and lock it into a fixed rate. You can keep it as adjustable. But the best thing about getting a fixed rate 30 years is you know what your mortgage is. It's not going to change hardly at all. Depends on escrow, and we'll jump in the weeds there a little later on with all that stuff too. But if escrow's done right and everything like that, if you get a 30-year, you know your rate, you're locked in, it's safe. It's a good, reliable method of financing a home, and for the majority of people, it's the most affordable way too. I learned about this just the other day. I didn't know about this option, and it's very new to the market too, so that's probably why I haven't really heard of it. But they're now rolling out in some mortgage brokerages and banks a 40-year loan. I'm not sure the advantages of doing a 40-year loan, frankly, because there's usually a higher interest rate, and you have it for 10 years longer, and the monthly payments typically are not much cheaper, meaning like $50-$60 cheaper a month if you do the 40-year to do that loan. So not sure the advantages of that point. I did learn too why they might be a little bit more popular is like places like on the West Coast, California particularly. They have interest-based mortgages where you just pay the interest on that mortgage as your monthly payments and never really truly pay down the principal. The reason being is a lot of people can't afford a $1.2 million house in San Francisco as a kindergarten teacher because frankly that's ridiculous and they don't get paid enough to afford that. And so the only way they can truly afford homes in that area or those kind of interest rate or even potentially a 40-year mortgage style loan. So they're not the best option, and 99% of people probably shouldn't look into them. But that's up to you and finance and to see what's best for you. There's also seller financing, and so you would then, the seller would act as the bank in this situation where you would be paying the seller directly in monthly payments. It's a little bit more complicated than that, but just the gist of it, that's kind of where it is. It's not very common. It's similar to assumable mortgages, and that will lead nicely into the only two mortgages that are assumable types of mortgages are not conventional, but they're going to be VA or FHA, so two federal mortgages. So VA is for veterans, and if you are a veteran and you would qualify with the lender for the home you're looking to purchase with their loan, you could then potentially qualify to, in essence, purchase their loan, but you would then have to have a loan kind of on top of or with that loan to help pay for the difference from the loan and the total amount. So whatever would make up that difference from the selling price to their previous loan. Same with conventional, you can do that, just depends. There's a lot more steps that goes into assuming a mortgage. It's getting more popular now that people are saying rates are so high, but right now rates are just fluctuating around 6%, which historically is pretty healthy. The biggest problem right now is the price of homes, which makes it more difficult. So, but that's kind of another option out there too. I'm not going to talk about trust deed or wraparound mortgages because frankly, I don't think I haven't worked with any. I don't know of many people who have ever worked with any, and I don't know much about them, so I'm not going to talk about them. And then lastly, the most important thing for especially those first-time home buyers or people that are looking for a little bit help, that are kind of on the fence, they may be done with renting, they want to afford a home, but they get frustrated because it's difficult out there and they can't. There are so many home buyer assistance programs out there that are state, federal, even local, county by county in Minnesota. There's so many options out there for grants or even loans that how it works is they grant you the money up front to help pay for the mortgage. You don't pay that back until you sell that property. There's also grants where they just give you the money. If you qualify for X, Y, and Z, they will give you that grant so you can better afford a home in their specific areas too. So there are so many assistance programs out there too. So get in touch with me or your lender you like to work with, and we can help you figure out what might be best for you. I have a few friends that are renting right now, and I want to help them out too, and so I'm sending them that information too. So hopefully I can tell you some good stories about us getting people out of that renting cycle that's frankly extremely unpredictable. You build no equity, and you're just, in my opinion, you're throwing money away. I hate renting, I hate leasing, all that stuff. If you can own it, you can take pride in it, and you can build equity in it, you should, because down the road you don't know what's going to happen, and you always know what your bills are going to be if you own it. So that's my little 2 cents on that. Next, we're going to talk about the hacks, how to save money when you have those mortgages, and how to pay them down and build equity quicker. So I appreciate you sticking with me through this whole little video, and hopefully it was helpful. Let me know in the comments below. Let me know if there was something you learned. Let me know if you want me to dig more into a specific type of loan, anything like that. And if you thought it was great, please like, and then share, subscribe, do everything, because that helps me build my audience, and hopefully I can help more people, because that's frankly my goal, is to help people get out of the renting cycle, build equity for themselves and maybe their children someday, and just have better lives for everybody. So I appreciate your time, and I'll see you guys on the next one. Thanks.